Portfolio Manager at Financial Lane Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, where do we investors stand? It is Friday, March the 20th, 2006. Let's get started. We will sort by week. You can see here again, pretty much a negative week here across the board. Gold, silver really coming down here at the bottom. We're going to talk a little bit about gold here, but down 10% in the past week. You can see the emerging markets kind of bouncing back a little bit here, but again, reminder, check your, the trend, right? The short trend, the intermediate trend, the long-term trend. You can see we've definitely had some intermediate term destruction of some of these trends that are happening in here. So again, are things changing? Of course, there's been a lot of change. Let's get into it. Let's look at these energy stocks here. On the left side, we've got the Spider Energy ETF, XLE. On the right side, we've got the Canadian energy stocks, XEG, which has actually been better, but they're both the same, as you can see. You know, we've got that chart that we looked at back when Venezuela was taken over, and you can see where the red circles are. That was when the day before, of course, before US and Israel attacked Iran. And you can see that, again, right now the media is going to do its job and say, hey, you know, again, Iran, obviously oil stocks are rising. But again, all I'm trying to point out is that oil stocks were rising before that. Crude oil definitely has risen. But remember, the media always wants to spin things and tell you exactly why things are happening. But the bottom line is energy stocks have been strong. It's been stronger for oil for some time. And yeah, now there's been quite a rally, right? This has definitely been the one place in this market that has allowed investors to, again, at least salvage the portfolio without having to sort of have some of the drawdowns that have happened in some of these areas. Let's look at some of those areas. Here's the Spider Metals and Mining we looked at. That's a 25% sell-off, of course, the last month and a half. The uranium miners down 31%, while energy stocks, of course, we just looked at them, they're up 30%. And so for that same time period. So as uranium, for example, which had been all the theme, certainly within energy, was down 31%, you know, oil and gas stocks rose 30%. So it just goes to show money flows, money changes, money rotates, and again, risk always must be managed. Just again, continue to look in on this just before that the recent Iran attack, war, whatever you want to call it, has happened. You can see what's happened, right? Crude oil is up 43%, volatility is up, yields are up, right? So that means bonds are down. Bitcoin has been the one thing here that has actually risen amidst it. And now you can see gold, of course, which has its kind of, everyone wants to believe it kind of always goes up in times of uncertainty and in times of, you know, exactly like these kinds of conditions. Well, it just sold off. Again, we'll get more to that. Good copper stocks, they've been pretty strong. There's Freeport down 27%. There's Southern Copper down 32. That's in the last 2 weeks, essentially 14 days. And so the bottom line is we do need to evaluate whether, hey, do we want to buy these? Because a pullback in an uptrend, a pullback to a breakout spot are opportunities. So again, market presents incredible opportunities, but you have to be willing to look at things with an objective lens and not get caught up with what the media is trying to tell us every day. Let's look at a couple of stocks here from the all-in-sync pool. Again, some of these aren't, you know, unfamiliar at this point, but Advantest, Japanese semiconductor, looks like a pullback in an uptrend. Applied Materials in the middle panel, that is a pullback in an uptrend. And Caterpillar still looks like a pullback in an uptrend, right? We should be able to tell uptrends. We don't need to sort of put a lot of fancy indicators. And so again, I always want to be able to make that case to you that when we see things going from the lower left to the upper right, that is the definition of an uptrend. Let's talk about, again, relative strength and absolute strength, right? At the top panel, we've got this ETF that we've talked about many times before. It's a WXM. We do own this. And so, again, this is an uptrend. You can see very definitely a lower left to the upper right. And in the bottom panels, we've got versus the US stock market and versus the Toronto market. So those are both also uptrends. So we've got absolute strength and we've got relative strength. That's exactly what I think any investor should want from not only their ETFs, but from their stocks. And when we put together portfolios, we want to constantly be thinking that, because we always want to go and invest in the most simple way we can. And so again, if your stocks aren't outperforming a sector, if your sector is not outperforming the market, you might as well just own the market, because frankly, there's less risk. Look at, again, just from a time frame standpoint, I've got the wrong chart on the screen here, but this is the CRB, it's the commodity research, it's commodities. Commodities have been surging essentially, and again, it is not because of Iran. I mean, yes, oil prices have been going up, but the bottom line is, as I'm trying to point out on the right side of your screen here, this is commodities in Canadian dollars. So when the Canadian government today, you know, I'm sure the headlines will again read, oh my goodness, you know, Iran war is causing, you know, rising inflation and causing uncertainty, let's say, for the Bank of Canada. Well, no, that's not true. So just, again, when we look at this, we can see that this is a massive uptrend. This has been going on for some time. And again, this has all been building, right? This is not happening only in the last couple of weeks. So the bottom line is that, you know, an incredible amount of money supply got, you know, put out there in the last many, many years. We've had interest rates have had a massive, massive bottom. And so again, I think at this point, the most obvious thing to say is that, again, I think the surprises are going to come from the interest rate standpoint, and they may even be increases in interest rates, which is exactly what these banks don't want. It's exactly what borrowers don't want. But again, rising commodity prices, which is rising input prices, which again does not tend to be very good. Being said, here's gold. Now gold, again, this is called chart crime. Why is it chart crime? Because this is a monthly candlestick chart, and the month is not done yet. This is March, it's only the 20th. But you can see that what we've got in development here is a bearish engulfing. In fact, I would probably call that the biggest bar against the rally as well, which has taken place in the last couple of years. You can see in US dollars, gold has risen from around $2,000 an ounce and went up to 5,500. That's a large increase. And now we've seen selling pressure come in on a couple of occasions here, right? So when we zoom in, we know there's been some volatility. We've talked about it over the last several months. And so from this perspective, I would say that the chart is looking like we're going to have to sort of now say gold has peaked. And now the question is, what does a pullback look like, right? And that's the kind of thing we're going to be paying attention to. Here's the gold and silver bullion on the left side, right? The CEF, which we've showed this several times. You can see our clients' activity. In reds, we're selling, greens, we're buying. So again, there's lots of tactical kind of opportunities to buy into dips or buy into pullbacks. And you can see that, as I talked about several weeks ago, we did buy back in, okay, after the selling that took place off the top. And again, we've now had to go and sell and trim and again cut exposure there because it just didn't look right and didn't feel right. And now essentially you can see on the right side of your chart, what we've got is, I think we've got a lower high in place. And so from this perspective, we've got a couple of those big kind of candlesticks. That shows us that supply is overwhelming demand. That is exactly the kind of information that we want as investors, is to be able to see what they're thinking. Because again, it's investors that move prices, it's dollars that move prices. And so again, we don't want to stand in the way of something. I think this is really interesting. Just this morning, the Canada 5-year government bond yield, which again tends to be, the mortgages in Canada tend to be based on, actually just broke out to a 14-month high. So that's 3.15%, still very, very low. I think you can see there, I plotted on a higher low that has taken place, but this is the chart going back to the lows, which is back in COVID, 2020 lows. I think this trend is going to, continue upwards, and I think that's the same thing globally. I've talked about it before, but this is going to cause a significant problem for borrowers. We've got all these mortgages rolling over, but we've also got governments that have also left themselves very short dated, right, in terms of the debt that they've got. And so this is going to be something that is going to go against what everyone wants to deliver, which is lower bond yields. They want to deliver, an easing. They want to make things easier for people. That unfortunately is not going to happen. We know real estate is very tied to this as well. Finish off with sector watch here. There's the energy stocks up at the top of the list. We've already talked about them. You see there's the gold stocks, 16.5%, 15% down. Everything's for the most part outside of energy short-term down, and everything in between. So I will be at the CMT Canada Quarterly Summit. Will be next week. That's Thursday. If you happen to be in Toronto, you can probably look that up. It's in concert with the Ivy Center, and then again speaking in Guelph the week after that. Please follow me on X. I'm at David Cox RJ, and thanks again for your time this week. This has been David Cox, Portfolio Manager at Financial Instinct, Waterloo.